Hi everybody, it's Dayton Schrader with eXp in San Antonio, Texas. We're wrapping up the first quarter of 2023 and it's been a really interesting first quarter. As you know, the Fed raised the rates again just recently, and so mortgage rates are somewhere in the mid to high sixes and low sevens depending on credit, down payment, and things like that. And I know that is gasp compared to where we were a year ago when we were at 3.5 or 4. The whole first quarter of 2022 was really good. Rates were still very low, but the Fed kept saying they were going to start raising the rates, and they did. And we've been around 6.5 to 7% since the second half of 2022. You get the national news, which is doom and gloom, but I can tell you in San Antonio, the market is still very good. There's still plenty of built-in turnover. There's in-migration. The unemployment numbers are really low. I think we're about 3.6% unemployment, which is essentially full employment. So anybody that wants a job in San Antonio has got one. The military is going to PCS a bunch of people into San Antonio, and we've got more people coming than going. We're still about 60,000 dwelling units behind where we need to be. So that's why you're seeing the apartments being built and the new construction continues. The prices have gone up, labor and materials have certainly gone up. The builders, though, do have quite a bit of inventory. And so they're starting to work and whittle down that inventory a little bit, but they're offering some fantastic incentives that are going to go away pretty soon. When they burn through that inventory, those incentives are going to go away and we'll be back to par pricing on just about everything. I don't think rates are going to stay this high for long. I think maybe all of this coming year, but then hopefully by 2024 and certainly in 25, they start to come back down. So if you miss the opportunity, you're missing out on all the incentives that are available right now, and you're missing out on the appreciation that you should realize over the next couple of years. The last few years, we've been going up better than 6 or 7% per year. I don't know if we can sustain that pace, but typically 4 or 5% a year. So again, you're leaving some money on the table if you're sitting tight waiting for the market to change. The days on market has gone back up a little bit from where we were a year ago. We were under 30 days on market, and still to this day, if it's a really good looking house, it's priced right, it presents well, it sells very quickly. Other things that are just a little bit overpriced or need a little bit of work are going to sit for a little bit longer, because ultimately that buyer decision is very discretionary. They don't have to buy anything, but they are looking. And if something good pops up, they're going to want to jump on it. So if we get the houses priced correctly, if they show like they should, then there's still plenty of appetite. Anything we can do for you, please let us know. Don't hesitate to call us. Thank you very much for your business, and we appreciate any referrals that you might send our way. We are hitting it hard right now. The market is still very robust, lots of things going on, a great deal of activity. So thank you very much for your time. Have a wonderful day.